Hello. Money Rails. Woo. Okay. Alrighty. Thanks everyone for coming. Excited to be here. Super excited for this panel. A lot of good people, a lot of good friends. I'll let everyone introduce themselves very quickly. I'm Jamal. I help out with payments here at Polygon, and I'm excited for this panel.
Hi, everybody. I'm Arik. I'm the VP of Technology at Fireblocks, leading technology research.
I'm Martin, VP of Stablecoins at Anchorage Digital, and we work in a bunch of things, but I work on issuing stablecoins for companies. We have Athena, Tether, USAT, and most recently Western Union, and a couple others coming.
Hey guys, I'm Rafael. I'm CEO and founder of Trace Finance. We do stablecoin and payment infrastructure in Brazil.
Hi everyone, this is Massimo. I'm with MasterCard. I look after our global blockchain digital assets and obviously now stablecoins activities.
What does MasterCard do? No, never mind.
I'll get to that in just a little bit. I'm just milking it.
They're a layer 3. That's what they are. Yeah. Anyway, pretty quality folks. Some heavy hitters on the panel. So we want to make this pretty interactive, pretty casual. Feel free to lob over questions, raise your hand, yell at people if you want to. A lot of really sharp people here with some edgy ideas and edgy perspectives, and we want to make it spicy. So yeah, I'll start with a question to Arik. We'll talk about Fireblocks. So traditional banks digitize money. Web3 is making money more programmable. We're excited to see that, and obviously the last 6 months have kind of shown that that's a huge topic. So what is the core difference between digitizing finance and rebuilding it natively on-chain?
Yeah, hi, thank you. So maybe I'll start with just a sentence on Fireblocks. So basically what Fireblocks does is provide the infrastructure for financial institutions to build on the blockchain, from custody technology to payments technology, tokenization technology, all the different, anything they need to do this. And obviously it goes from banks, like actual big traditional banks, all the way to fintechs and a lot of other financial institutions. So in terms of I think basically what happens a lot of times is we're basically the layer below the bank that helps them in the bank situation, that helps them do this transition. And so I think the first thing that everybody does is they continue the same trajectory, right? So they have a process, it works one way, that's how they used to in the regular digital space. And then they translate this and just use a different database, sort of you know, in a simple transition. The thing about programmable money, so right, in regular finance, you have smart institutions with dumb money. And so that gives you only some amount of options. But once you have smart money at the hands of the banks, so first they do the same thing, but then over time, they start thinking about what else can I get, right? So a lot of the frameworks they have right now are based on the fact they cannot put anything on the money itself, but there is an evolution. And I think it actually creates a lot of new interesting questions. For example, we're automatically assuming that the custodian, for example, right, is the bank, right? The bank is the custodian of the money you have because he holds the keys. But in smart money, if somebody has access to the code on the token, maybe they also have some custody responsibility, right? So I think that's part of the things that changes. It's not just about the technology. The entire paradigm can change because money becomes smart. Yeah.
I have a question. What are you seeing institutions do with smart money? Like, what use cases are you excited about that they couldn't do before, that you're discussing with them?
So I think right now, first of all, most of them just take it, simple, right? They take the simple, so what happens today, same infrastructure, same process, new infrastructure, new pipes, right? That's what I see mostly happen today. I think the one thing that people are most excited about right now is identity. So trying to connect identity to the assets in a way that, again, allows them to do more things, right? There's a lot of things that are gated right now in systems because you cannot have identity part of the process in the money flow. So if you can get identity, first of all, obviously it can create some things we like less, right? A different kind of gate weighting, but it can also open up a lot of opportunities.
Yeah, love that. I actually want to jump to Massimo because we brought up the identity topic, which is amazing. We obviously announced a partnership with MasterCard. We're really excited about. Totally agree, and I think everyone here would agree with me that identity, compliance, and bringing more of that infrastructure on chain is a critical step to really getting us to the next level. And I think that everyone here on this panel is doing that good work. But Massimo specifically, and I know your broad focus is not just on crypto credential, but in general, what do you think MasterCard is really doing at its core to see blockchain and stablecoins fitting into the existing network that you guys have, and where the future of that lies?
Yeah, thank you. And well, congratulations on the recent announcement on the credentials piece. Certainly, I think there's part of novelty in that announcement, and I think it's a very PR-driven ecosystem, obviously. So we're all very excited about it. But it's also nothing new to Mastercard. I guess we've been, we've seen and we've been part of quite a lot of disruptive waves of changes within that industry. I've personally been at Mastercard for about a decade. That's a long time actually, now that I think about it. But I've seen, the rise of e-commerce. I've seen the explosion of like neobanks and the fintech and the sort of banking as a service infrastructure, the digitization of the entire economy, right? And so all that to say, obviously, tokenization isn't necessarily something that is not like completely novel to us. It's something that we've been through and we've seen and we've driven for a bit of time. I think a notion of novelty here is that we're no longer just tokenizing information, or we're no longer just tokenizing identity in the case of credentialization, but now we're actually tokenizing real-world assets. We're tokenizing value itself, right? And that's a major sort of shift that we're seeing. But just to take a few steps back, I guess with MasterCard in mind, to put into a sort of helicopter view perspective, MasterCard has been moving value for consumers and institutions around the world, whether it's B2C, whether it's institutional, whether it's remittance flows. We've been doing that for 50 years. So when you see a new set of money rails, no pun intended, you can't ignore that, right? If you look at, again, I was having this discussion with our fellow panelist here about 5 minutes ago. If you look at the S&P 500 about, not even 50 years ago, about 20 years ago, right? There's quite a lot of turnover. Like a majority of the companies that were listed there before are no longer there today. And so what that means is that we need to stay relevant, we need to stay credible, and we need to take these new emerging technologies, these new emerging rails, these new emerging infrastructures as something very seriously, as I believe a train that we don't want to miss. And that's certainly what we're doing at the moment, and we're highly committed to this space. To your point on stablecoins, I think obviously we're seeing quite an acceleration in institutional and use cases driven by the adoption of stablecoins. Why that is, I think we've all experienced this in the past 10 to 15 years, I guess, within this space. There's always been a bit of a gap, right? There's always been, on one side, a highly speculative, highly volatile, and to some extent quite scrutinized asset class, right? Cryptos, and the word itself has been sort of scrutinized quite heavily. But then on the other side, you had the blooming promise of blockchain, decentralization, trust, programmability. It's 24/7, it's always on chain, it's always available, right? And so you kind of had these two worlds, and there was a bit of a regulatory gap as well in between those. And I think stablecoins are helping. Certainly, my position is that regulation, partnerships, but also the adoption of stablecoin as something that is more familiar, that something is more stable in the sense of value, is really helping bridge the gap and making sure that large-scale institutions are able to use stablecoin as a conduit to get on chain and to finally benefit from the benefits of the blockchain infrastructure without having to take the risk or to be exposed to that level of ability. So I think that's really helping accelerate institutional adoptions, and that's a space that MasterCard is strongly looking into.
Yeah, no, I mean, I think the purpose behind naming this money rails is just that we see blockchains as just another payment rail. And we see them as a very hyper-efficient, hyper-scalable, a global payment rail, but it's just that. It should complement the existing financial system. It should work really well with compliance, with KYC, with traditional banking, because it's that interoperability that's going to deliver the best user experience. And to me, it's just like very, very exciting to see someone like you guys, who is literally, quite possibly the financial backbone of our entire economy, for you guys to validate that everyone here is building towards the right thesis. And we still have to figure out some things, and I think that's why us getting together and exploring different ideas and building together, and all these people here are doing that work. But it's just really exciting to see someone as significant as yourself coming into the space and showing that this is really real, and everyone here is building towards a great thesis, which is exciting. So, love that.
If I'll add something. So it's interesting that there's this duality in the blockchain, right? So like some people, first of all, like the fact blockchain is actually like permissionless means that institutions can actually build on it as well, right? Like, and some people, that's like weird for them because they think permissionless is like, oh, it's permissionless to the more anarchist side of the permissionless. But then permissionless also means that like traditional payments company can just use it for whatever they want. So there's this duality of use cases that happen, where some people think about the blockchain as a very philosophical idea that has a lot of values behind it and meaning behind it, which is great. And then there's other people who say, oh, it's like another rail that I can use. And like, you know, I heard somebody say, if pigeons were faster, maybe I use them, but actually blockchain is faster, so I use that, you know? So it's like a very different way of looking at the blockchain and what it can give. And I think a lot of the value comes in from the fact that it's such a generic technology that it can actually serve both of these situations, which is very cool.
Yeah, no, I totally agree. I think that to continue like praising, well, all of these people, but to continue praising Massimo, who I love. Massimo's a great guy. And wait till you have 2 tequilas and we'll see what happens. But no, it's not just payments with MasterCard, and that's why I was really excited to see it's a whole gambit of things, and you guys are looking at it broader and more as like a financial operating system, which I think is very important. I mean, you guys have the MTN network, which is a very powerful framework that we're seeing get a lot of adoption, a lot of really good institutional buy-in. Crypto Credential is a great example. Obviously, you guys are getting into stablecoin settlement, stablecoin card issuing, and then whoever knows what's next, but it's not just payments, and I think that's important that you guys are really seeing this as the foundation.
Indeed, and it's not just payments, hence, you know, money rails, but as essentially value rails, identity rails, you know, rails of, it's the tokenization of everything on chain or on a new set of infrastructure. But interestingly, and this is something that I like to mention in these types of conversations, although it took large institutions a while to, you know, get with the program, let's say, and that's totally normal, including MasterCard, obviously. I'm not shying away from that. But funnily enough, you know, the original Bitcoin white paper, the title, and, you know, I don't want to be quoted here because I can't remember by heart, but it's essentially like a peer-to-peer electronic cash, like a payment system, right? And so, like, payment is at the core of the original thesis of this entire movement. And so this is something that, again, reinforces that, you know, there's no way to look at it in a sense that we wouldn't want to adopt it in some kind of shape or form. It's just a matter of how we really bring it to shape in a compliant, trusted, and safe manner. But also, I think, and because I'm not a tech deep person, and I think sometimes that's a good thing. Obviously, this is quite a complex industry, but I think to look at, you know, this set of new technologies in a way that solves for real life problems is really what we need to do here, right? It's like nobody wants to swap and bridge and go from L2s and manage seed phrase. That means nothing to a lot of people, right? However, sorry, apologies. It's the tequila that Jamal promised me. However, if you need to send $1,000 to your grandma abroad in Italy for urgent medical care, that shouldn't take 4 days, 5 corresponding banks, and $50 fee to get there. If you want to take your girlfriend out for a slice of pizza and a Coca-Cola down the street, you should be able to pay that with your self-custodial MetaMask card and it works, or your future Polygon MasterCard card and it will work, right? If, I don't know, in the future you want to mortgage a house and use your collateralized credit on Morph or Aave, like these are things that solve for real life problems and makes it real. And I think that's an important piece of like large-scale adoption for what's yet to come in Web3.
So you're saying that if I get a MetaMask card, I'll find a girlfriend to go take out for pizza and Coke? Is that what you're saying?
And get a mortgage.
And to get a mortgage?
I'm saying if you get a MetaMask card, you can finally pay for those tequilas that you offered me.
That's the missing piece. I didn't realize it. Okay. So to Martin, I want to ask a question more about some of the traditional banking rails, how we're seeing it converge, because it's obviously our opinion that money rails or blockchains aren't a replacement to the existing financial system. They're a complement, they're an upgrade, they're an exciting upgrade that's going to supercharge money. So you guys obviously are very deep down the traditional banking stack. You guys work with some heavy institutions. How are partnerships evolving with these banks? And specifically, are we seeing collaboration? Are we seeing competition? Are we seeing convergence? How do you see the two worlds living?
Yeah, so an introduction of Anchorage. Anchorage is a custodian. It's been a custodian since 2017. We've gone into a bunch of other businesses lately. And the way we position ourselves is we have one foot in crypto, one foot in TradFi. That means you can hold Bitcoin with us, and we support some of the largest DATs and ETFs, et cetera. But you can also hold fiat with us, and you'll hold the fiat underlying right now with Bank of New York. Soon we'll have a Fed Master account. So we kind of have those two legs. We mostly work with very large institutions. Most of my time is spent improving the rails for stablecoin issuance, which means I touch a lot the tokenized asset space, RWAs. We're the largest buyer of RWAs in the space. We hold some in Polygon as well. And we're also a big consumer of 24/7 tokenized cash, right? So most of the banks are looking, how do we play in the space and how do we sell to these institutional clients, of which we are part of? What we see is, I don't see a migration where they're going to rip and replace their core banking system. That's too risky. Each time it happens, there's an issue. So I think it's going to be like a two parallel track. They'll have products for crypto companies, and I think a lot of the growth is going to happen on this path. But the traditional kind of fiat system, Fedwire, Swift will continue to exist, and it's going to be a slow migration, at least in the US. I think outside the US, that migration is going to happen a lot faster, right? So if you work with dollars outside the US, you realize the big pain that is, and how stablecoins are 10x better. So I think that's where you're going to see a lot of that growth. And most of the large banks, every GSIB, I would say every super regional, like top 20 banks in the US, they are seeing there's a deposit growth opportunity. And if I don't play with the stablecoin and I don't market this product, JP Morgan and Bank of America are going to win it and not me, right? So there's like a race. And I think the key day was July 18th this year when Genius passed. That was the signal, okay, you can now start really getting into this game. So it's super exciting. I think this year was the year of like the stablecoin RFIs. Next year, you're going to start seeing some like real, very large announcements. And I think next year we're going to close, I would venture to say, $1 trillion in stablecoins by end of 2026.
I love it. We're all getting our matching July 18th tattoos after this, just to signify the big day. But no, I mean, I love that. I want to double click into that a little bit more. Obviously, you guys have some of the best regulatory infrastructure in the space, a very established brand, really, really robust banking infrastructure that's available. You guys obviously just got the Western Union deal, which is super, super exciting. You guys are touching a lot of the direct customers. How do you think all of that you said trickles down into the user experience? What do you think we can expect for our users to look and expect, and you know, what do we want to deliver to them to make sure it's comfortable and easy to tap into this?
I think for the next couple of years, you're going to see like a separated crypto and fiat experience. I think that the tangible way this is going to materialize is you're going to start seeing like a QR code in your app where you can deposit stablecoins, and you're going to see a stablecoin balance. I think there's going to be a period of time where fiat and crypto are segregated, but where most exchanges are landing after doing that for many, many years is we needed a unified dollar balance. And essentially they're going to say, okay, Western Union USD and USAT and whatever, any Genius stablecoin, I'm going to take them one-to-one, and I'm just going to give a dollar balance to the client, and I'm going to manage the complexity in the back doing treasury management, the same way that treasury managers today have bank accounts at 10 different banks. And yeah, technically you have a liability to Bank of America and a liability of JP Morgan, but you see dollars in your balance sheet, right? So you're abstracting that away. So I think short term, we're going to see a lot more crypto experience. It's going to be enabled in a lot more TradFi apps. But like I would say in the next 5 years, I would expect the crypto part to disappear under the experience.
I want to ask a question about that. So I think it's the unified balance is a totally interesting approach, right? But the concern I have about this, would love to hear your opinion, is the risk factors, right? So like you have your bank account, and initially it's like USDC and USDT, and at some point it's like USD XRL, and you're like, what is XRL? I don't know, but it's in my balance, and suddenly USD XRL depegs, right? Because like, how do we make sure unified balance is both a great UX, but doesn't create a situation where we inflate a feeling of I have just USDC, but actually what you have is like some extremely risky derivative of using USDC in a lot of collateral loans, like some things that happened recently.
Yeah, so first of all, what tokens you accept in this unified balance matters. I think the way that most are going to go is say, okay, if you're Genius compliant and you're not doing anything weird, I think you're accepted on the unified balance. If you are a tokenized hedge fund that happens to have a NAV of 1, you probably are not going to be accepted. That said, even Genius compliant stablecoins are not all the same, right? Like we've seen stablecoins that have underlying cash at risky banks. I think we're going to see a stablecoin explode that puts all their money in a bank account that pays them a little bit more yield, or a bank account because they don't have access to other bank accounts. So I think that's going to happen. The other thing that's going to happen is you still have to manage the stablecoin correctly. The fact that you have a stamp that's Genius compliant doesn't mean you know what you're doing. And an infinite mint attack is still a possible attack vector. We had a near miss recently, but like those things can still happen. So I think each app, when they create this unified balance, they have to say, okay, I'm going to accept, I don't know, maybe you say, okay, the ones issued by Anchorage I accept, and I also accept Circle, and I also accept the Paxos ones, but I'm not going to accept, I don't know, whatever issuer that I don't trust enough. So you're going to have some that you accept. And in the end, it's going to be the treasury manager to manage that risk in the underlying. And maybe they say, out of all of these that I accept, I want to park it everything on, I don't know, Western Union USD because that's the safest, according to my opinion.
I don't want to sound like the MasterCard police is in the room, right? But I fully agree with this, not only the question, but the answer. But again, I think underpinned by evolving regulation, I think regulation and then compliance oversights and these sort of things will help also sort of bedrock these types of accelerations into stablecoins and the risk factor in a significant manner, right? So I think, you know, it comes with a price, I guess, but...
And by the way, this is not only regarding which stablecoin, right? It's also which blockchain, right? So like if you have USDC on Polygon...
I thought that was obvious. That's an easy question.
Yeah, right? Like it's important. Like, oh, it's on a blockchain that now, like, it was a single server, blockchain disappeared, all of the balances of that blockchain suddenly...
A blockchain that turns off for 24 hours, yeah.
On that is, sorry, I don't want to take the moderator role, but are there, like, are we, because obviously we're seeing a boom and we're discussing, you know, acceleration of stablecoin, adoption of stablecoins, you know, growth of multiple layers of infrastructure, you know, coming to the forefront of the economy. Do we think it's going to be similar to any wave of innovation whereby there's a lot of newcomers, there's a consolidation, and then there's a key set of few winners, you know, some mergers and acquisitions, some get absorbed, some fail, a high rate of failures. Are we in that phase where there's, you know, stablecoin everything and, you know, chains everything and there's going to be a strong consolidation? Or are we going to see something different this time and a bit more, you know, decentralization in the use cases?
And the last question I want to add on to that, how do we see interoperability, right? Like if I have 5 stablecoins, I want that to be under the hood, but I want it to work seamlessly. So how do we make all of that work nicely together?
Yeah, I would say there's different services in the value chain, particularly on the stablecoin issuance, where like I have a little bit, that's where I spend my time. I think we're going to see thousands of stablecoins, and the market dynamic is going to be probably similar to banks, right? In the US, you have 5,000 banks, and essentially stablecoin is a way to run a bank where your marginal cost is a lot cheaper. You come to us, and for a very cheap price, you get your own stablecoin. I think if you are sitting on more than $100 million of cash, you should launch your own stablecoin, right? So the bar is very, very, very low. So it's like not just the JP Morgans and the Bank of America, it's also Chipotle should launch a stablecoin. And Pizza Hut probably should have their rewards given in stablecoins as a way to get people to repeat their purchases. So like the tail can be very, 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 very long, right? So I think we're going to see thousands. On the flip side, I think if we talk about blockchains, I think there's going to be a lot of consolidation on the blockchain side, because in the blockchain, who accepts your blockchain really matters. And adding more and more blockchains is actually very hard. So I think on that one, we're going to see a consolidation of like a handful of winners, probably similar to like the cloud market, right? You have AWS, GCP, and Azure, and it's like three that kind of win.
I think we will see, like I agree we're going to see the explosion of stablecoins, but I actually think we will see a consolidation back afterwards. Don't know how much time it will take. Because, first of all, a lot of the rails we have on the blockchain right now, they're not really a good fit for like 1,000 USDC stablecoins, right? Like liquidity pools, indexes, there are going to be a lot of attacks because you will not have enough liquidity, and somebody finds the chain where you can attack liquidity of a specific stablecoin, destable it. There's going to be like, I think there's a lot of assumptions in how things are done currently on chain, where basically we assume that there needs to be quite a lot of liquidity. You want a bridge, some solver needs to be on the side of that bridge to complete you. They're going to support 1,000 stable coins. Like there's a lot of things that will not add up. Now, maybe it is solved by a lot of unified stablecoin kind of like mechanisms, but I kind of think actually the market dynamic will first let everybody launch their stablecoin, then they get the headache of managing liquidity across 50 different chains, and then they say, okay, maybe never mind, I'll go back into like an existing one.
Yeah, I would say that there's a couple things. A, DeFi was built in a capital inefficient way because you have tokens that can essentially subsidize that. And I think a lot of the primitives on DeFi assume there's people that are getting incentives that provide capital that are non-sustainable over time. Second, many of the stablecoin issuers don't care about DeFi. Like Western Union is not going to like create an Aave pool for Western Union USD, at least as far as I know. They care about using it for payments. So a lot of DeFi is a market in itself, which is a subset of what everything that you can do on crypto. And third, I think like all of the challenges that you're saying are opportunities for founders to come in and say, let me reimagine Aave, but knowing there's going to be 1,000 stablecoins issued by 3 issuers, and like you can swap between them going to the issuer. I think there's an opportunity to reimagine a lot of the infrastructure we have in the space, knowing that now you have a lot more entrants kind of coming in. So yes, I agree. That said, I think we are very DeFi focused right now because that's the big thing in crypto. I think DeFi is going to be less and less. Like if you talk to most people, they don't interact with the like TradFi infrastructure to like do stuff. Most of their days just payments.
So just to make it interesting, I think they do care. Why do I think they care? And I didn't talk to them, okay? I think they care about 2 things. The first thing they care about is not to be in the middle of some attack on their stablecoin, right? Because if, they don't care, but they kind of don't care as long as everything works okay. And if something doesn't work okay, then like it's a big problem for them. So like, I think for that reason, they do care about the mechanisms that exist on the blockchain, even if they're not participating in them, right? Even if they don't necessarily choose themselves to participate, they put their money in an ecosystem that has some primitives that they have to consider. So I think that's like one thing they care about, right? Like they don't want to be...
You mean at the blockchain level?
Exactly.
Or at
exactly.
the DeFi protocol level?
At the DeFi protocol level, right? The fact that DeFi exists already has some impact on them when they're on the blockchain, even if they didn't choose to do anything with DeFi. I think that's number 1, right? Number 2, I think that the fact that they come into an ecosystem that already has a lot of this innovation happening, and they're not coming as the decision makers of that ecosystem, right? Like banks are not the decision makers on what happens in DeFi. So they're actually in a situation where their competition between themselves, which they care greatly about, is in conditions where one of them might decide that they are willing to do DeFi. And if that one gets more traction to their stablecoin because they are willing to do an Aave, Morpho, is something, right? Suddenly, the other one comes in and says, wait a sec, I'm getting beat on chain. I need to also support DeFi. And so pretty quickly, they're like, we need to support DeFi, right? So like, I think this is actually something amazing that the opening of innovation in this space, not being controlled by the legacy ecosystem, forces them to adopt things not in their own pace.
I agree with that, and coming from a legacy point of view, I guess, although we're a highly innovative global payment company, I shouldn't laugh when I say that, actually. I don't think legacy is a general word, but I don't think legacy or existing like large-scale global existing infrastructures are in a position where they can innovate within this neo space without actually stitching together with with partners that are crypto native or that are blockchain native, right? I don't think we can build on our side, try to be competitive, and then push that out onto a market that isn't ours anymore, right? It's a market that we need to build credibility into, and I'm not speaking only MasterCard here, but you were mentioning large banks, etc. And between those two, and we've seen the same in the sort of fintech era, let's say, or the digitalization of the financial system, players that are going to come and supply for that infrastructure gap, right? So players that are going to, and we're starting to see it today, right? In fact, there's some of those in the room today that I was speaking to, players that essentially connect the dots between the old systems and on-chain and off-chain, DeFi and TradFi, etc., right? Or in the case of stablecoins, like these stablecoin as a service platform. You were mentioning, obviously a JP Morgan launching a stablecoin. I think they can hire, build, and buy themselves into it, credibly so. But Chipotle, as you were saying, maybe not, right? Maybe that's not close enough to their core business. So they will go to providers that essentially are helping them build that infrastructure and make it credible for them.
Yeah, I want to get my man Rafael involved for sure. Yeah. Yeah. No, I love it. We need another panel after this. Yeah. Rafael, I mean, Trace Finance, I see you guys as a monster in LATAM. You guys are one of the closer ones to the consumer. You're in the trenches a little bit. You guys are doing monster volume. You guys are doing great work. Everyone's talking about you, and all of that's great. So as you are in the trenches, I want you to tell us a little bit more about how we are balancing some of this compliance with the user experience as well as with decentralization. How do we remain key to the ethos of crypto? How do we make it a truly open, equitable financial ecosystem that everyone can participate in? But how do we deliver a brilliant UX that also maintains compliance?
Yeah, perfect. Thank you for the words. But at the beginning, we started as a Web2 company. So we were doing cross-border operations for PSPs in Latam, especially in Brazil. And we were moving a lot of money to US, Europe, Asia. And we realized that we were sending money to Hong Kong, Singapore, and other geos. And the money will take 2 up to 4 days to arrive there. And it was so inefficient. And we started to looking more in crypto solutions. And we are also backed by Circle and other crypto folks. And then we started to do the cross-border operations, use crypto, USDT, USDC on the back end. And doing that, we were one of the first movers in Brazil. We were able to get a lot of volume. So in the last 12 months, we processed more than $5 billion only in TPV, doing cross-border operations for Shein, Temu, Meta, Riot Games, Amazon, all those big logos. And we realized that the KYC is totally different now. Because operating with legacy banks, you need to do the KYC with the Brazilian bank, all the correspondent banks. There is a lot of bureaucracy on that. Nowadays, we do the KYC on the on-ramp, off-ramp, validate everything there. But when it is on-chain, it's much more easier and faster. You just need to check the wallets and the small things. So we see a huge opportunity there. And we do think that in the next couple of years, the way that we transact money globally will be totally different as we see today.
What kind of trends are you seeing on that side of the house as you are kind of someone in the front lines a little bit more? What do we need to be paying attention to? What do we need to improve? What do you think is like the best next step there?
Yeah, today we have everything 24/7. So you have communication 24/7, you have information 24/7, but you don't have settlement money 24/7, even in the same country. In Brazil, we do have PIX that's 24/7 for free, but for example, in the US, if you want to settle with someone, you send a wire, the money will take up to 30 minutes to get there. So, and I see nowadays we don't have time to wait. we need everything 24/7, instantly at the same time. So for me, it's the main difference that I see in the today.
And if you had to, last question, then we'll move on. But if you had to rebuild anything out of the stack that you're using, what do you think is the most like top priority for us to fix, or try to disrupt, or try to upgrade, or whatever we want to call it?
I would say the intermediaries. So I would take off all the intermediaries. Everyone want to deal with one company, and I would say in the future, everyone will deal. Everything will be decentralized. Everyone will deal with each other. No intermediaries. That would be cheaper as well. And yeah, for me, the main pain point here is all the intermediaries that we have today on the market. Yeah, I do think that CPN can be a good solution, but not only CPN. I think for example, in Brazil, you have a lot of capital control, so you can't have Brazilian reais outside Brazil. You are able to have US dollars in Singapore, in Hong Kong, in Europe, but you cannot have Brazilian reais outside Brazil. And that's why we are thinking we will launch our Brazilian reais stablecoin, because we will give access for global companies to Brazil reais. So yeah.
Can I?
It's I want to say I firmly agree with what you said earlier. Well, all of that you said, but just coming back to what you just said earlier, it's crazy to think that we live in this hyper-digitized world, right, where the consumer expectation is so insanely high. They want instant gratification. They want slick UIs. They want and they get. They want one-click checkout, and it's all real time. Except when you look at the financial ecosystem and the actual traditional financial industry, for all the good, it hasn't evolved all that much, right? Settlement happening on Wall Street hours in batch. You know, that's crazy, right? So these are the very clear use cases for why institutional and mass adoption needs to happen within blockchain, within this tokenized ecosystem, with stablecoins or not. It's because it should have been solved already a while ago, and honestly, it's not up to par with what the consumer expects in a world of today, right? It's not something that we look out in the future. It's something that is an expectation for today.
But it's kind of happening, right? So we're working with some of the largest names out there to solve the 24/7 problem. So whenever people come and redeem, I don't know, 300 million of a stablecoin, they want their money immediately, even if it's a Saturday, right? So we went to our large vendors and we're like, hey, I need you to give me 24/7 deposits. I need you to give me permissionless deposits that I can at least move inside of Anchorage, between Anchorage clients so they can settle. And I need a redemption facility from your securities into the 24/7 deposits. And that's what we're working on. Of course, it moves fast for finance, but slow for crypto. But I think end of 2026, we're going to see stablecoins that don't require cash, where you can redeem more than 50% of the TVL of the stablecoin on a Saturday into cash. And I think after July 18th, many of the banks got the news, okay, I have to actually solve these problems, because if not, Anchorage is going to move to another client, or Circle is going to move to another client, right? So I think that message is starting to land. And right now, folks are seeing, okay, how do I actually solve this problem? But I'm very positive that it's going to get solved.
Of course.
There's 5,000 banks. There's 6 GSIBs. Most of these GSIBs are looking at something to do. So I think at least one will have a solution that we can buy and procure at some point next year.
So I want to do a quick speed round.
Can I do a curveball on them?
Yeah,
Can I ask
quickly,
just one, a quick one?
Quickly.
So you have a bank and a payment company. Which one goes first? The intermediaries. Because I think
No, just Trace Finance will acquire both of them. That's what's going to happen.
Yeah,
right? Yeah.
and actually we are discussing
Consolidation.
with a Brazilian bank to acquire a part of the bank. Yeah, today it's still very important to have a bank behind us. So yeah.
It's because I think we're all want to have no intermediaries, but then we're like, oh, but actually I do want protection of my money. I need somebody to do this. And then, oh wait, I actually want this to go fast. Oh, wait a sec, how do I connect this to this merchant on another continent? So I do think there will be changes. I'm just not sure exactly how they're going to be changing, because actually every one of them has some role to play, and we need to understand how we actually solve for the purpose, not just is there or is there no intermediate?
Yeah, I think that the power of the blockchain is not that you remove the intermediary, it's the power that you could remove the intermediary if you wanted to, and that keeps the intermediary in check. If I want to charge you 500 bips to do something, you're going to be, I'll just go do it self-custodially and I'll figure it out, right? So it forces consumer surplus across the value chain, all the way to Trace Finance, all the way to the user of Trace Finance, right? So I think that's the biggest power. Some of the places that I think are now set in stone, where the intermediary is not going anywhere, stablecoins, right? Stablecoins require an OCC charter bank to be the issuer, qualified custody. I think anything that's payments where you have fraud protection, fraud is not going anywhere. I think anything institutional or retirement accounts or anything that's kind of regulated where you don't want to give a monkey a machine gun, right? So crypto is kind of a machine gun. You can do a lot of good stuff, but you can also kill yourself and basically lose all your money. So I think there's a bunch of places where intermediaries are not going to be disrupted, but you can start a competitor very easily with crypto, whereas you couldn't before crypto. And that's where margin compression happens all the way to the end user.
So I want to do a quick speed round. I'm going to do 30 seconds apiece. I want you guys to each talk about how you guys see the future of partnerships and how important partnerships are for whatever you guys are building and how you see the collaborative effort. All four of you guys are brilliant people, and you guys all know each other. We're all friends, which is why I love this. But how do we see all of us working more closely together, and how important are partnerships in this whole thing? Quick 30 seconds per person.
I'll start, and I love partnership. I speak about partnership every time I get up on stage. I think nobody gets anywhere, especially in a hyper-complex, hyper-intermediated, and fast-moving space as this one is. So for anyone on this panel, just so I put my money where my mouth is and everybody on stage, please find me, because we're here to build innovation agenda together with partners and not do things on our own and try to disrupt the space without the right partnerships. I think in terms of where we see the future, or I think what needs to happen, or some general, I don't know, words of wisdom, I guess, it's, I think the winners are the ones that help solve real world use cases, and solutions in Web3 really start coming to mass adoption and scale when it becomes intuitive. Like the UX we were discussing needs to become intuitive, not complex. When it's trusted, when it's transparent, but especially when that entire technology and infrastructure becomes invisible. Nobody again wants to bridge, swap, and chains and all this stuff. People want to earn, burn, pay, send, receive, explore, experience, right? So when the technology, or whether it's on blockchain or TradFi or whatever, becomes a completely abstract and invisible part of those solutions, that's when we're going to see mass adoption.
Yeah, I think that just one single player, he won't change anything. The only way to improve the financial markets, having all those big logos here and working together and improving everything that they can, and doing that, the end user, he will have a much better experience, cheaper and fast, and yeah.
I think this is a hyper-competitive industry. You have to pick a lane, be very good at it, and then buy everything else. So you need to understand what your asset is and what you're not going to be good at. And yeah, the rest you should procure, and that procurement forces your vendor to be very, very good.
Yeah, connect.
Are you saying you're in the market for companies? Do people need to come approach you after this?
Yeah.
How much are you offering them? No. All right. Yeah, no, actually, I agree, and I wanted to say something similar. I think there's a theory that says companies should only do things that they're going to be either the best or number 2 at, right? And I think we're there for our core things, right? For anything that fall outside of that, if you cannot be the best, so giving a third-grade solution when somebody else is actually amazing at it is just doesn't provide a good product eventually, right? So in all of those things where somebody else is a real expert, you should be partnering. And actually in our ecosystem, there's a lot of really hard things to do, right? There's so many hard problem fields that there is no single company that can be really great at all of them. So
we talked about a couple of them now. What happens when there's 1,000 stablecoins? What does Aave do? How does an exchange manage that? Many of the smaller banks come to us and ask us, okay, what should I do about crypto? because I've done the math, and if I accept USDC, I don't make any money. So what do I do? And that's a big question that they should answer, and someone should answer that question for them and sell them a service. I think there's a lot of like new blank space and new problems for folks to solve.
Yeah, we have a few seconds left, so I'm going to do this. You have 4 very brilliant leaders at some of the most important companies in the crypto space. I want each of them to give you one word of what to pay attention to for the next 12 months. No pressure. And then I encourage you guys to mingle and meet some of these folks and talk about new trends. But in our last couple of seconds, one word, one topic, something that we should all be paying attention to for the next 12 to 18 months.
Regulation.
Privacy.
I like both. I'll say partnership just because.
Regulation, yeah.
Yeah, I think the regulation is there. I think it's more like execution, like actual shipping of the products.
Thank you all for having us. Come have a conversation with these brilliant guys afterwards. Thank you for joining us. We're excited to see money move faster at Money Rails. Thank you.